What is going on, everybody? It's TG here, and I thought I'd bring you guys a very important video and an update video on Michael Burry, also known as the Big Short, and his massive bet against Tesla and his massive bullish position on companies like Google and Facebook. We're going to break down his portfolio along with his bet against inflation and his massive bet against ARK Innovation and Tesla. Before we start this video, if you guys want, just hit that like and subscribe button. It means a ton to me, but let's jump right into this video.
So Mike Burry of San Jose, a guy who gets his hair cut at Supercuts and doesn't wear shoes, knows more than Alan Greenspan and Hank Paulson.
Yeah, Dr. Mike Burry, yes he does.
Recently, the 13F filings for hedge funds came out showing Q2 position updates on all the hedge funds, and we got to see what Michael Burry was doing. The biggest and most notable one was his massive increase to his Tesla short. If we look at it a bunch of months ago, it talked about how he had 800,000 Tesla shares that were shorted. Now that number is over 1 million Tesla shares shorted by owning put contracts. This is valued at over $731 million. Actually, a little less now because Tesla has risen significantly since this 13F filing was updated, when Tesla was sitting right around here in the mid 700s and is now trading at $816 a share. This is a massive bet for Michael Burry and for his hedge fund. One of the reasons being it represents over 35% of his entire portfolio is in this bet against Tesla. And it's not just his bet against Tesla, it's also his bet against ARK that takes up a smaller percentage, obviously, but still a couple percent of his portfolio, totaling in total almost 40% of his entire portfolio is betting against Tesla and betting against ARK, which, if you notice, ARK owns 10% of Tesla in their fund. This is a massive, massive bet, and Michael Burry has been very adamant on Twitter and active talking about why he is betting against Tesla. He says, Elon Musk, I'm short Tesla. Talks about how basically if Elon wanted, he could dilute shares 25 to 50% and raise enough capital to basically solidify himself and his company as, you know, a powerhouse. And obviously the stock would go down because of dilution, but there would be buyers. And he goes in and talks about all the numbers with Tesla, talks about how, you know, they don't make much money, how other companies make so much more. And I found this chart very interesting as well. If you look at the leading automotive companies in the world and you look at how much they make and how much they're valued at, Tesla makes almost the least amount of profit, only about $1 billion, and yet they are valued at the number one. And if you look at what they're valued at, this was back a while ago when it was $673 billion. Tesla is significantly higher than that now and is trading at over $800 billion. So you look at that, you look at something that's $800 billion. Tesla's worth more than almost all of these automotive companies combined. Now, obviously, Tesla is not just a car company; it is a tech company as well. But its primary revenue stream comes from vehicles. Now, that is one of the biggest reasons, you know, Dr. Burry has pointed out and talks about, you know, that the company just doesn't make money. It only besides the credits that they make is what they're making money from. And you know, this bet is one that, you know, can really shake up his entire fund. You know, obviously he's doing good positions in stuff like Facebook and Alphabet, which is obviously very important. Facebook did take a bit of a hit recently with the whole whistleblower scandal, and their stock's trading around $328 a share as of right now. It is up a little bit today, but obviously, you know, very bullish on Facebook as well, and, you know, added to his position significantly. But one of the most notable ones is his bet against inflation. Now he is buying the 20-year Treasury bonds, owning puts against them, so he's betting against it, and he's adding to that significantly. He talks about that he's not making against bonds, but making a bet against the system. So the bearish options would make money if Treasury yields go up, and consequently the TLT exchange would fall if this happens. So you know, they're betting very big against this, and you know, just talking and basically betting against the system and talking about how inflation is going to run so rampant that the interest rates have to rise, and the Treasury yields have to go up because of that. Now, this is actually a bet that a lot of people do think is going to pan out very well. A lot of people are skeptical on the Tesla bet, just because, one, it makes up so much of his portfolio. Two, Tesla has a cult following that is something that we've never seen before, except in the meme stocks like GameStop and AMC, where regardless whether bad news comes out, no news comes out, good news, they're going to buy up the stock like crazy. And the only real way that the Tesla train stops is if there's a massive crash, and so many of these traders who are trading on margin, because Tesla is one of the securities that are heavily bought on margin, if that happens, it will cause a massive crash. And I think that's something that Burry's betting on, is a crash to happen. And when people sell, they're going to be selling stocks that are more like that, stocks with PE ratios in the 500s, rather than stocks like Alphabet or Facebook with PE ratios in the 20s or 30s. And that's another topic, his bullish bet on Alphabet, which is the parent company of Google. Google is considered one of, if not the most innovative companies in the entire world, and has just seen their stock increase massively over the past decades. With their acquisitions of Facebook, or acquisitions of YouTube, and their advertisement business and their search platform. This is huge, and Scion owns 92,000 call options that are worth over 230 million. That represent a 15% stake in his company. Now, this is obviously huge, and one of the things that I really like about Google is their free cash flow. The company makes a lot of profit. They make a lot of profit. If you look at their earnings quarters, every quarter they're making a ton of profit. And so that's a great company that he owns. But it all really comes down to the Tesla bet. When you're looking at it, you're wondering, is this train able to stop? It hasn't. It pulled back a little bit in May, and when everything was kind of taking a bit of a hit. But I mean, these guys buy the dip like it's nothing, and we see that over and over and over again. The dips continue to get bought, and it doesn't stop. So, depending on where Tesla price ends up, potentially Michael Burry could lose all of that money. And the reason I say that is because if the puts expire worthless, then he loses everything. So, for instance, if he bought, because they don't disclose exactly what strike price and what expiration date he bought, but let's say, for instance, use a round number, he bought the 1,000 strike price of Tesla for next January. If Tesla stock price continues to rise and goes above $1,000 a share, those puts are now out of the money. And when those puts are out of the money at expiration date, those puts are worth nothing.
Then the swaps contracts are voided, and then the banks get to keep all of the collateral.
Wait a minute. Wait.
All of it.
What? The contracts are voided? The contracts are voided? Holy shit!
Nothing on the date of expiration. So if we actually look at this from a standpoint, I want to show you guys a prime example on Robinhood of what this looks like, because a lot of people are not very familiar with how options work, because they are kind of risky. So we'll use this Robinhood account and show an example of this. If we go over to Tesla and we look at this, we can clearly see what can happen while trading Tesla options. So, for instance, right now, if we go and buy a put on Tesla, that is, let's use that exact example. We'll use January 2022, and we buy a put for a 1,000 strike price. So we go all the way up here, and we buy one put. And right there, that is going to cost us $19,000 to buy that put. Now, this little chart right here is something that's pretty interesting. We can see, if Tesla's at a certain price at a certain date, we can see how much we make, how much we lose on that. So our break-even price is $803 a share. And if Tesla decreases in value, obviously we make more on those. But let's say Tesla is above $1,000 a share by that price, we lose everything. We lose all $19,680 because it will expire worthless. So that's the risk in bets like this. I'm sure he went out much farther, giving himself a ton of time. But also, again, you go out farther. Let's say he goes out an extra year. These puts are ridiculously more expensive because of the intrinsic value that they hold. So that instead of being worth $19,000, it's worth $29,000. So that extra year, you have to pay an extra $10,000 per contract to do that. And so that's what I think Michael Burry is doing. And again, this represents a total of 35% of his portfolio. With the ARKK bet, that takes up about 40%. So we're looking at almost half of his portfolio is strictly betting against basically Tesla and these innovative companies. Now, ARK is obviously a lot different. If we actually look at ARK right now, ARK has not been doing too well this year. It has done decently overall, but you look at the past year where it was, at least in February, even year to date. This company year to date started off in like the 130s, 140s, got as high as 156, and has pulled back hard since. They made a very bad bet with Coinbase stock, buying heavily on the IPO, and they paid the price for it, because if we look at Coinbase stock, it has fallen hard, and you gotta love Spectrum Internet. You really gotta love Spectrum Internet and how great of a company Spectrum is, with this amazing Wi-Fi connection. Pay a bunch of money for it and does absolutely nothing. But Coinbase initially jumped up to over $420 a share and pulled back hard since. I don't know how I feel about Coinbase. The competition in the crypto sector is insane. And this is a company where 98.7% of their revenue comes in just from fees alone. So again, if the Robinhood effect happens, we made a video about that. A company makes a platform where you can trade commission free with crypto. It kind of makes Coinbase almost obsolete. So, and that's why one of the reasons he's betting against it's so big. But you're betting against Tesla and some of these companies as well, these innovative, futuristic companies. So yeah, guys, it's going to be interesting to see what happens with this bet. I think it'll be interesting to see over the next couple of quarters when the new 13F filings come out. We can actually look over them and break them down. But overall, let me know your thoughts on this, guys. If you want, hop in the Discord and chat with me. I would love to talk to you guys about it. But anyways, have a wonderful day, and I'll see you guys in the next video. Take it easy, guys. Bye-bye.